Introducing X-Credit LP staking from industry-leading RWA loan collateralization platform Credifi. Earn 10% cashback in USDT after 90 days, with more rewards coming soon for X-Credit holders. Visit v2.credifi.finance today.
Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone 1 minute past midday here, making it 1 minute past 1100 UTC. A big shout out to everybody that is joining the stream live today, as well as everybody watching this on recording. We've been getting up to 5,000 live viewers recently. And I just want you all to know I appreciate each and every one of you, as do our entire fam over at the Bird Nest. I want to just start by giving out a very special mention this morning to our partners over at Bitget. You know, without these kind of sponsors, it wouldn't be possible for us to bring you guys this content for free. So a big shout out to them. Just one of the best, most engaging trading platforms. And as an intraday trader, you know, from my own selfish point of view, just the very, very best fees out there. Okay, so if you are interested in anything that they do over there or anything that we do, you can find links down in the description, and we'll drop some reminders in the chat as we go along. So without further ado, we're just waiting for a few more people to start coming in. I think I might have caught some people off guard by being a little bit earlier than normal to this one. So big shout out to everybody in the chat. Apologies if I don't get around to it, but obviously Cappy, good morning. Our lovely Erica as well. Julian, great to see you back again, my friend. Bernd as well. Duncan, hello mate. And Zach, always here. And take a look. Yeah, take a peep at Bitget. You know, like, look, guys, we're always transparent how this works. You guys sign up for Bitget, you trade with them. We get a small portion of your trading fees as commission for us for promoting the exchange. However, the big difference with the very best companies that do it in the space, and we are the industry leaders in this respect, is that we have an entire dedicated due diligence team and fundamental team that always look into these. We do not ever promote anything we don't use ourselves. That's why I trade with Bitget. So do let me know how you get on with that. And if you need any help at all, this is the great thing about the collective that we have here with the Bird Nest family. You just reach out to us. We can get directly through to Bitget. Although I don't think you will need that. I have to say, one of the best customer services teams around, as are most of the major exchanges now as well. So how are we doing? Sebster, good morning, mate. Good morning. So I thought I would start with Ethereum today, just for a little different bit of flavor, and just kind of give you guys my thoughts on where we are. So while we're doing this, obviously it's Alt Request Wednesday, meaning that you get to request any charts that you would like me to kind of chart live while we are together today. So please don't hesitate. If you've got something, pop it in the chat and we will take a look. Yeah, this is a really, really good point. I mean, and it's a very, very good point here raised by Seb, right, which is the back and forth low time frame chop suey in Bitcoin is very frustrating. I mean, even when we look at ETH here, right, on this level, I mean, you basically got, you know, price here is kind of really in a range. It depends how you kind of draw your ranges, you know, whether you're looking at this as an expansion range, so you're looking for a clean high and low to be drawn across here, for example. Yeah, I quite like that here because we've got this touch point here, this touch point, deviation, price steps back inside, pumps, kind of falls down a little bit short here. Not really got an issue with that because technically what we then do is we split the, you know, these parts of the range into their own 50% as well. And, you know, you're kind of creating in this respect like a range within a range. Now, obviously with range trading, one of the key things that we're looking to do here is you're looking more for mean reversion than anything. Sui, of course, Erica, anything for you, my friend. Evening, T-Boy. Ozzy, my friend, how are we doing? Grab some Vegemite for me, my old son, and we'll do a Vegemite and Marmite salute at the halfway point, all right? But you're absolutely right, I've got a beautifully brewed Yorkshire tea sitting here. A little sip for you there. Still, in my opinion, the very best. Fun enough, friends of mine that live over in Oz, every year we send them like a pack of just little bits and pieces that you'd miss. So my friend Chris, for example, loves, you know, silly little things like jammy Dodgers, bit of Yorkshire tea. He's a big fan of PG Tips as well. Certain bits and pieces that I know you guys can get over there, but it's either crazy expensive. Vegemite, are you more of a Marmite guy, or are you really on that kind of spectrum that you're really not involved in either? But to go back to, so Kusama, yes, do you know what the ticker is for Kusama? Zach, I'll write it down anyway. Perfect. Let's have a look. Yeah, so we'll definitely take a look at that. Cielek, good afternoon to you as well, my friend. Let's have a look. We'll do. So if you have got any anything you'd like me to take a look at, guys, please do let me know. We'll take a look at this on ETH. And obviously we're going to take a look at Bitcoin as well. But being the alt request day, really kind of for me, this is like the KSM work. Thank you very much, Erica. KSM, that would make sense, wouldn't it? Oh, nice. Okay, so Casper, which is Cas, right? And then do SHIB, please, just to watch you look puzzled. Oh, I like a challenge, actually. Render, SHIB, beautiful. Well done, guys. That's a load for us to be getting on with. Okay, so look. CK, of course I can, mate. AR as well, and Myro. Here we go. They're flying in today now. Really got my work cut out for me. So going to keep this quite simple and quite straightforward, right? So a very quick introduction for how I look at the markets and how they work for people that aren't aware. My principles are based on liquidity. So I'm looking for price to attack liquidity above old highs. Okay. Below old lows as well. So for example, like we had this one here, which also happen to be equal lows. And then I'm looking for, when price does that, I'm looking for price to rebalance, basically make its decision within gaps. Now you'll see these as gray on my chart. Sometimes, you know, for people that are new on here as well, I'll do the bearish ones as red and the bullish ones as green. So you can kind of get that. The other thing you'll see on my chart are these, okay, in purple. Now, what does this mean? So this is a really big part of how I trade. This, when it was made, when it was formed, right, was a bullish gap. So the gap was clearly formed here. Yeah, between, it's a 3-candle pattern, any gap, same way that you see these gaps between the wicks, right? So as this was formed, then we've taken liquidity from a high, external. Now the play is to, because we look higher high, higher low, higher high, we're in a bullish market structure here. The plan is to price to correct down to there, and then ultimately seek out liquidity higher up in the form of another high, or we're obviously cautious and looking at how price reacts at these gaps as well. So think of it like this: high to gap or low to gap, unless this happens. Right? Now, when we close below here, and this isn't the greatest example because we typically, when we get this close below, we then look for liquidity to be swept lower. Now, we've got this liquidity here as well, but we've taken out these 3 key lows here. However, this shows us that this should have been support. It's now turned to resistance, meaning that it's a gap inversion, okay? The gap has been closed below. It's failed to do what it should have done technically, which is provide, not should have done, but the idea is that this is basically a decision-making area for price. And while we're bullish, we expect bullish gaps to deliver long trades. If we close below them, we invert them. We've shifted structure. The plan now is to watch as price seeks out liquidity lower down, all right, as we see here, right? And then we obviously see here as well that we get this other gap, which is a bearish gap. So I'll do that in red because price has displaced lower here. There's been a failure for order pairing. Market makers then push price, or you get price move back to these areas to rebalance that inefficiency, and then the market continues on to seek liquidity, normally in the direction of the trend. Duncan, yeah, Rose, mate, no problem. It's going to be a busy close to the show today, right? I'm going to try and get this whole thing wrapped up in the next kind of 35 minutes, which is about 15 minutes shorter than my usual 1-hour ramble. So that's the basic principles that I'm looking for, all right? Price moving to attack liquidity above old highs, old lows, and then we're looking at how we react within gaps. If we have a bearish gap, we favor shorts unless we invert it, same as this one, yeah? So that's currently where we are. So let's get rid of replay mode for a second and see where are we today. Well, quite simply, price is delivering from this bearish gap on a daily scale here on ETH. So while we're delivering from a bearish gap, the expectation is for price to seek liquidity lower down. So what I'm then looking for is, okay, where are the swing lows? So we've got one down here all the way at 2,311 flat, yeah, which is over here on Bitget. Always got a little bit of extra attention when we see round numbers, okay? So then we've also, on the close of this candle today, if we get the close and we don't take it out, we would have a closer swing low here, but we don't have that at the moment. The other thing that really interests me here is this high. Now, this is a very strong reaction at this bearish gap. We can see by the long upside wick the price really didn't enjoy that, literally tickled it, and then it's had that strong reaction down. So at the moment, I'm saying to myself, okay, what is the likelihood? We're kind of in between these two liquidity pools. In my opinion, the chances are that we move down for this. However, one thing that I'm also kind of considering here is this. Remember, this was a bearish gap between these. Price initially couldn't close above it. It failed again, but then it did. This is now an inversion, meaning we would look for this area to hold. So what you can see is that we're basically kind of caught between these two areas. So I'm going to move to a 4-hour here. Let me get the session breaks off. So for intraday traders, I mean, by the way, these session breaks, which you can access through your chart settings and then events and then just session breaks, they're just day dividers. Helps intraday traders, I mean, look for key liquidity pools on previous days. Now, the work that I do on these sessions with you guys is typically of a higher time frame to give ourselves a kind of broader market view. But what we do on our live trading sessions at the Bird Nest is the members come along and trade with me live 3 days a week, like we're going to do this afternoon after this session, and we look to go in and kind of scalp intraday charts. However, for this stuff, the session breaks don't really add too much to us, so we can get rid of those. Now what I'm looking for here is extra context, and one of the things that I like to do is I don't like taking trades in the middle of nowhere, right? And what do I mean by the middle of nowhere? Well, I'm looking for these expansion legs that we have, so a clear low to a clear high before price corrects. So for example, we would have had, this would be an expansion leg here from this low to this high. Then we see the corrective move. So then we see that this low to this high, yeah? And then, yeah, we kind of extended it here, which is fine. Now we kind of come down and set these lows here. So my real kind of interests are in these legs, yeah? This one, and then ultimately we've got this one to the downside. So forget the rubbish drawings. It's just to kind of indicate where I'm expecting liquidity to rest. So for example, if we look at this, we took this higher. Yeah, what happened? When we set the high of this leg, price dropped down, found this bullish gap, allowed us to have this move higher, then we rejected here, and that's what set price looking for liquidity lower. Ultimately, price then found liquidity here. Price made a small correction higher, came back down because it hadn't quite got enough fuel. It's a good way to view liquidity, right? It's like these fueling stations. We know there's fuel above old highs and above old lows, and we know they also exist within the gaps as well. A good way to look at the gaps is like having a kind of fuel depot or a fueling station. You don't really know how much fuel is in there. So as you're going up here, price has made its way from here. It's moving up, grinding up in its bullish manner, going from fuel depot, the gaps here, expansion into another gap, till it gets to a higher time frame level here. And this is our higher time frame bearish daily gap. Now, when it gets in here, it's quite simple. This depot wants you to go for liquidity lower. You can see that by the long upside wicks. Yeah, price rejection here, big rejection here. And then ultimately, we're now correcting, looking for that liquidity lower. So we know we can start targeting these areas, okay, until we see some kind of structure recovery or some kind of area that we need to engage with. So for example, we have this bearish gap here. So now what have we done? We've taken liquidity from the lows, yeah, external liquidity. We've now moved to internal liquidity, which is this gap. So at the moment, really kind of looking to favor more downwards price action, but only to the next resting liquidity. So right now, price has got a decision to make because we can see that we've taken out this swing low. Now, a swing low for me is quite simply, or a swing high is quite simply I would give a high as an example, first of all. a higher high flanked by two lower highs. So that high is lower than that one. That high is lower than that one. Therefore, this makes a swing high. A swing low is where we have a low that is flanked by two higher lows. Yeah, therefore makes that a swing low. Okay, just to give you some context. Now, for me, the higher time frame we find these on, the bigger the liquidity pool. So that's typically where price is driving towards. So in my mind here, price has got a decision to make. Look at these long upside wicks here. You can see the absorption. You can see the sellers winning the battle against the buyers, right? So the bulls are trying to force price above this level. The bears are desperately trying to defend it. So to be bullish here, we can wait for a close above this, and then we can be pretty confident that price is, heading for this liquidity via this swing high. However, if we see too much weakness at this level here and price starts to get back below it, if this is all the liquidity, if this is all the fuel that price needs to really take off here, then it shouldn't have to revisit it. Yeah. So basically, you should be getting a move like that if price has got enough fuel from this, enough liquidity, right, to take that bid. But if you see something like this, and then price does something like this, the chances are that price needs liquidity from lower down. It just doesn't have the fuel that it needs to get up here. So then we start looking at where that fuel exists, and the fuel exists down here below this untapped swing low. So we want to then see what price does here. It then allows us to take short trades into here and then focus on this area here for the resurgence. And if we see the strength we want to see, that's then when we can start looking higher. So at the moment, it's quite simple for me here. ETH is kind of in a little bit of an indecisive moment. We can see the pressure coming here from the sellers. The safest thing to do would be to wait for price to establish itself above here. And what do I mean by establish? Well, you want to see a strong close. What do I mean by a strong close? Well, for me, I want to see price get up into this area here with a big bodied candle with a really minimal wick. In an ideal world, then no wick, just a big, strong, powerful candle. For example, right, when you see a very, very strong close, and you'll hear me use that term, let me see if I can find you a good example. I find a really good example here, actually. So price here gets into a downtrend. So we come from a higher low to a higher high to a higher low to a lower high to a lower low. Yeah, so the break of this here gives us our market structure break. So this induces people to go short. Yeah, market structure is broken at this level. What am I going to do? I'm going to short this. So what a great liquidity pool that leaves for other interested parties, especially major players, to take this bid on the other side of the market. Because here, other people will look at this, that we've taken this low. We've swept liquidity. So what would we look for in here to give us that idea that price is actually heading up for these kind of highs rather than grinding its way lower? Quite simply, I'm looking for how it reprices within these gaps. So remember, bearish gap here. So what do we want to look for? Look at the long downside wick. This is just buyers flooding in, buying up that asset. Then we see the big body close with a small wick here. That shows me strength. This becomes an inversion, and that's the first stage of the recovery here of price. Now, we see this secondary one here, and this plays an even bigger role because look at the body here. There's no respect here for that gap. Absolutely none, right? Compare that to how price has reacted here. Yeah, look how price engaged this gap and then boom, sell off, immediate rejection. Look at the difference here. Big closes through, big, strong body closes. The bodies, and I think SC was the person that really hammered this into me in the early days. The bodies tell you what price has achieved. The wicks tell you what it tried to achieve. Yeah. So here, the bears tried to force price all the way down to here, but actually they couldn't. This all got bought back up. And then look what happens next time. They make one last attempt, fail miserably, and price has this huge expansion higher. So that's why it's always really important to look at what the candles and, in my opinion, what the gaps tell us. And then ultimately, we've just got this really clear and obvious high resting here. And then we've got a clear and obvious high resting over here as well. And then look how well that does it, right? Again, look, watch how price moves through. This initial rejection here, you're thinking, okay, look, we've had this nice expansion. Another thing that you'll see on here as well is this order block. These are really, really key because when you're in an uptrend, you want to see the down close candles support price, which it does here. So we're finding support here, but we see this initial rejection. That then means that when we step back onto the charts here, if we wait for this candle to close, notice how it fails to take out this high. It leaves it as a failure swing, meaning that on this candle here, we can step into the charts, wait for price to pull back, knowing that there's a high likelihood it's going to attack liquidity above that. Then what we say to ourselves is, okay, well, what do we then see after that's happened? Do we see that big body close above it like we see here? We absolutely don't, right? And then when we're looking at this, you start to notice these bearish gaps appearing. And then you start to say, okay, price is rejecting at these. It really can't bring itself up into them. It certainly can't bring itself above them. And again, for that extra confluence, we wait for those inversions. That was supposed to support price. Price struggled. We then closed below it here, making it an inversion. Remember, like we saw down here, this then provides the ceiling that we're looking for price to reject lower and chase down liquidity targets lower down. All right. So that's a really quick overview for you guys. In the next kind of 25 minutes, I'm going to try and run through 1, 2, 3, 4, 5, 6, 7, 8 of these tickers that you guys have kindly given me. We're going to overlay those exact principles. And then we are going to absolutely crush through those charts. All right. Actually, there is something that I wanted to tell you guys as well. We're doing a promotion at the moment with Bybit, with Bitget. Sorry, if you've got any, especially if you're a spot trader, this is amazing. So first deposit, you just trade over $100 USDT, and you're going to receive 20 back. It's running from the 8th to the 22nd of October, so you've got some time to get involved with it. But you can also grab some really big goodies over there as well. And if you're not already trading with them, then you can sign up. You've got this, you've got other welcome bonuses as well, and we are doing some exclusive content for them too, which could and should give you access to TDM. And hopefully, if any of you are interested in coming and joining me on the day trading sessions, then you can absolutely do so. But do please go and check that out if you've got any interest. All of this stuff you can find down in the description. All right. So without further ado, we're going to start with SUI. Yeah. I'm going to keep these ones on the spot charts for you guys. I know that most of you are spot traders. Well, first of all, we can see the levels we've got here on SUI. We can see we're back within this range now. Again, I know I can sound like a broken record sometimes, but look at this move lower. Yes, we've got a little bit of a wick here, but look, price moves lower. It sets this order block because, again, if we're in a downtrend, we want to see the down close, the up close candles defending price. Yeah. So suppressing price, keeping it lower. Look at what a good job that's done. Yeah. And continues to do. Let me see if I've got this highlighted as a range, possibly. No. Let me select these bits and pieces, and then we'll just start with a nice clean chart. Beautiful. There we go. Weekly and daily levels. Always important to try and keep a nice clean chart if you can. Something that doing a lot of these shows and that very, very easy to leave yourself with a lot of messy charts. So let's actually start here on the weekly. Now we've got this target is very, very close to being hit. So that is really of great interest to me out here. This is 2.1818. Yeah, wow. I think there's a lot of liquidity resting there. I'd be very, very, very surprised to see price not kind of come up and take that. But, we can do this, or we can do this, right? We can even do, a lot more than that. You can come all the way back down to here and recover it. However, when we see these failure swings left, which make equal highs, then the odds are that price comes back to take them out because they're just too much of a tempting liquidity target. Now, we can see here on SUI, combined with the narrative, that we've had this real kind of push to the upside here. All right. So, very, very difficult to fade this. But again, look at the bodies of the candles. You've had strong expansion, slightly less. This is more of a doji showing a bit of indecision. And as this is at the moment, obviously, we've got a long way to go in the week yet. You can see how price moved up. And again, look at the way the upside wicks are starting to take dominance here. Now, what I'd really like to see here, personally, from an investment perspective, is price to come down to this gap before it takes that high and then do this. Because for me, lots of people will be chasing longs here. It gives it a chance to reset the leverage. And then I'm also looking here and saying, okay, well, what else do I have here that I can add confluence to? Well, we've got this bearish gap here, right? So that bearish gap failed to reject price. We got the strong close above. We inverted it. Therefore, this area holds as support. So what better way for price to come into this area to retest it properly, wick below it into this gap before recovering it, and ultimately then push up and have this really nice bullish resurgence. So that's where we are on that. I think the daily is going to give us a little bit more context. Now, on the daily, it's really, really, really simple. We have taken this higher, so it's natural for price to have this corrective move lower. So I'm happy with that. Now, I'm looking here in this bullish gap, or in this bullish gap below here, to see price react. And this is where I want to be a buyer. If we close below these, then I'm targeting this swing low down here, which is down at 1.6048. The other thing that, well, sorry, almost choked on me tea then. The other thing that we align with here is this. We have this bullish order block down here. Yeah, so that down close candle, when this closed above, confirmed this as a bullish order block. So this is where I'm looking at. Remember, we're looking for these down close candles to support price. Price closes above it here, support, support. This one comes a little bit lower, but I'm fine with that because we didn't close below it. Then we recover this level, and then ultimately we're looking higher. Well, that's what we're looking for here. So again, when we talk about confluence in this game, this is what it's all about. It's not about just having kind of one idea or one principle. You want to keep things simple, but you also want to be very fluid. I don't want to say to myself here, I'm just going long. It would just be silly, right? What I'm saying to myself is, fine, price can move down to this area here, and now I've got a set of parameters. As long as we hold this level, then I'm a buyer, right? If we close below this, then I'm a seller, all right? But only down to the next liquidity. This here is where I would then be looking for price to run this low, give us a nice little setup pattern where we get this recovery and ultimately move higher. However, if we then zoom out and on a daily scale, we start losing these levels more and more, once we break structure, or shift structure below this line, that's when we start to see the bearish gaps approach, and then we can move into more of a sell model. But while we're here, then this is what we're looking for. We're bullish. Don't fight the trend. The trend is your friend until the end. So let's look for longs in here. Now, the 4 hour will give us even more context, and we can see here again, how price is moving through these levels. We get the inversion here, which is our first indication, and this is a really good inversion. Why is it a really good inversion, BC? Well, it's a really good inversion because it supported price here, but we had a failure. Then what happened was our indication here by the setting of this order block, and look how that came into play here as well. Just simply the up close candle, price closes below it. It does two things. On the close below, let me just zoom in for you so you can all see it clearly. On the close below, we invert this, making it resistance. We then have this order block that we've set, also making it resistance. So then we're just looking for price to seek liquidity lower, which it does below this low, and then it continues down. Once again, we then come down and we close below this up close candle. Look how then that offers resistance, right? We retest it again here. What we're doing is we're drawing in areas of interest, right? Areas that we know where we want to have a long bias, areas we know we want to have a short bias. Then we align that with our higher time frame bias and say, okay, look, on a daily and a weekly chart, I'm bullish. So on a 4 hour chart, I'm happy to intraday or short-term swing this lower because I've got key targets. However, now I'm in here, I'm not looking to short this. The time to short that was from up here into this move, right? Now I'm in here, I'm looking at making this long. Do you know what? We just closed down the requests for the day for all gain. But do you know what? For you, I will, my friend. Why not? But this will be the last one we're going to take. All right, guys. So this is 1M baby Doge on Binance. Is that Binance maybe? Sorry, mate. Or if not, it's maybe an exchange I'm not familiar with. Just do let me know, and then I'll make sure we look at it on the right one. So that's where we are. So how would I play that? Well, quite simply, I need to see an indication of strength here. So if I'm looking to long this, I don't just want to blindly long it here. What I want to see is a sweep of liquidity, which we can see here. I then want to look left and know where we're delivering from. Great, we've taken out a really nice low here. Have we taken out this low? Yes, we have. And if you look, we're delivering, Binance, well done, mate, perfect. We are delivering from this beautiful skinny gap, are we? No, we're not. We actually closed below that gap. So we are delivering from this beautiful gap here. Look how price just tickled that, right? Bullish gap, key low. Why is it a key low? Because it's a gap low. It's a low that comes into a fair value gap or an intermediate term low if you've ever studied any of Michael or like ICT stuff. So here, I'm not against this, right? What I want to know is, here's the liquidity sweep. I want price to give me an indication it's ready to move higher. This for me is the high that's capping the market, because that's the high that led to the low being swept. If price is ready to move higher, I want to see it close above this. So I want to see it close above this, limit order on here for the retest, and then to trade it higher. Because what I can do is it gives me a really key set. I know I'm wrong below the swing low, and I know that I have higher targets all the way up to here. If we hold this level, if we don't get the strong close above, I'm not placing the limit order, and I will merely wait until we get some of those higher time frame triggers. Okay, perfect. So, okay, so that's SUI. Now we're really going to kind of kick this up a little bit. So KSM. Oh, are we back there, guys? Apologies. I think we just lost audio. Let me go back through that again very quickly. Check, check, check. Yeah, I think we just had it. Can you just confirm, guys, that audio is back? Guessing the word from the boxes. That's it. Brilliant. Okay, guys, apologies about that. Hopefully that's okay now. Probably my fault. Anyway, I'm asking myself what price has done last, and we've swept this higher. So because we've swept a high, we're now looking for price to rebalance, basically make a decision within a gap. So we're now within this gap, and we have recovered it. Moral, hello, mate. Sean as well. Thank you, guys. Appreciate it. Appreciate it. Everybody, Erica Burned, everyone let me know it's back. I'm sure I've probably just done something really stupid. So we've held this. So now on a weekly scale, this doesn't tell me too much, right? What I can do is mark in the prior week's low. Yeah, PWL for prior week's low, because that's a key liquidity pool. But I don't know if price comes and runs this, and then within the same week comes and regains this. So I need a little bit more context. And then I need to kind of take a look here and say, okay, let's remove this for a moment because it's not really telling us much. We know we've got the prior week's low below. That's a really key liquidity pool. We've had an initial kind of change in the state of delivery here because we can see price started to recover. Yeah, we had this bullish, we had this bounce, set this down, closed candle, price closed above it. Ultimately, what have we done? Price tried to push higher, but rejected from this gap. Yeah, bearish gap. So that's where we saw the rejection. Fine. Now set this bearish order block, which has been retested. So, I think it makes a lot of sense that price is looking lower here first. So I think we would be looking for something like this on the recovery or something deeper before then moving higher. We would then want to see this closed above, and then we can really start to make a move higher. However, we can still look to finesse this a lot more on the daily chart, so on the 4 hours. So let's do that. So on the 4 hour chart, what have we done? Well, okay, so we can see here, this is the rejection here of price. Price came down. So if we apply the same principles, we don't really have any gaps here. There's no real inefficiencies. So what we can do is take into account the most recent order block that we have. Yeah, so we can see here the up close candle, price sells off, comes back in here, finds a rejection here, and ultimately then we're looking to sell this off lower. If we start closing above this, yeah, and let me just delete that for a minute. We know that's the higher time frame level. But if we start closing above this, then we're looking for the up close candles. So the top of this one to be closed through, in which case we look for this to then push to liquidity higher, which ultimately with no gaps in here is looking at this swing high here around about 19,249. So they're the conditions there. While we're in this structure here, we're looking lower. We need to see a recovery, a close above this level here, which is 18,174. Then that allows us to move higher. But we do have bearish order blocks to contend in here, so we want to see that kind of shift. I would be showing caution with this one, to be honest. I think this could kind of take out these lows first before we get that recovery. But ultimately, this would be our first sign that price is looking to move a little bit higher. So KS, let's have a look at Casper. What have we got this on KS? Nice. So on a weekly scale, how is this looking? Heavy. In truth, right? One thing that we have done here is we've taken out these which look like pretty much perfect equal lows. We'll take a look on a higher time frame as well. So when you take out something like equal lows, there's an expectation really that we get some kind of reaction here. This actually looks very heavy to me. I would have expected the moment that we ran these to see some kind of resurgence, which we haven't seen. The next key point of interest then becomes the level at 0.12504. We look at that here. And we can see that this gap here continues to kind of support price as well. So price kind of makes its way back into here. I'm not so worried about that because it's been rebalanced to the bottom of this wick. So I still think that this is the draw on liquidity lower. What else can support that would be a daily close below our up close candle here. So if we get the current close, or the candle looks as it currently does, then that would give me even more conviction to trade down to this level at 0.12504. So what if we want to start looking higher? Now, remember I said to you I was surprised to not see a strong reaction here. Well, we can see that we did initially, right? Price just tickled below the equal lows here. And you can see as you drag them back, then we saw this kind of, you know, actually they're not equal lows, so it was that low and that low, so that's not right. So on this time frame, they're not actually equal lows. This was merely, I say merely, but that was a liquidity sweep that we saw a strong reaction from. So then we're saying, okay, well, what was the reaction at this low? And you can see here, right, again, that strong close below, retest of that level before price sells off. But the order blocks have been very, very clean here. Yeah, there's our combined up close candles. We close below it here, retest one, big sell-off, secondary retest, sells off even deeper. So on the daily, if we get this close below, my expectation is for price to head to this level via this. All right, via this low here, this daily low, which was Tuesday's low, which is 0.13144. So on a 4 hour, how does that look? Once again, it looks like the kind of inversion here has set the tone. We've closed below this. Price could look to maybe retest it, but ultimately we can see how the higher time frame order block is kind of holding price underneath. So for me at the moment, I'm bearish on this instrument. I absolutely have to be judging with what's in front of me. So my first kind of port of call here is 0.13144. If I wanted to change that thought process, I would need to see price back above this gap, which is currently a bearish gap. We would need to see a close above 0.13939. All right, strong close above that. If not, I think we flush these out lower. One other thing to say just very quickly and to flick this over, and please do remind me if I forget to switch screens, which I do with an alarming regularity, is what we've got in terms of news today, right? So this week, we've had a very benign red folder news. This is news that affects traditional markets and ultimately then trickles down into crypto. FOMC meeting minutes. This is where, Fed Chair Powell and other people from the FOMC will take the stage and justify the reasoning behind the rate cuts, what they're doing recently with the 50 basis point cut, what's going on with inflation, how they're tackling it, how their models are working against bringing inflation down. Now, these are just reflections on previous decisions that have been made, but the tone in which they speak is incredibly important. If he comes out and he's very hawkish, meaning that he's saying, well, we don't know if we're going to have many more rate cuts, or we don't think we'll be cutting at a level that we have done so far, or maybe the recent cuts we've had have put us in a dangerous position, forcing us closer to a recession, then the markets will typically react bearishly. So think of hawkish comments as bearish comments. If he's dovish, meaning that he's saying that these things are working and that inflation is coming down and that we think we'll see more cuts in interest rates, that can really cause the markets to rip. Then we move into CPI, unemployment claims, and then we have PPI towards the end of the week, focusing on the US markets, which are still the biggest markets and the biggest catalysts to our markets and also to cryptocurrency. So just to put you on there, you can find all of this stuff on our website as well. We have the economic calendar on there. We have all kinds of goodies that you can access for free. So please do go out and check out theburbnest.com. Let me type it in here for you. A burb with a B. All kinds of free goodies on there, guys. Should really, really help you out. So that's where we are here. Very quick question from Bert, and I'm aware that there is a question higher from Forrell as well, but I will get back to that, mate, once we take a look at the ticker that you're on. So the Birdnest and BC. Hello, Bernd. How do you see fair value gap mitigation? 50% wick or fully filled with a close over? So for me, it's really, really simple with gaps, mate. Let me find you an example. So until a gap is closed below, yeah, so use this as an example. That gap has been perfectly rebalanced. It's a bearish gap, right? By being rebalanced, we can see wicks all the way to the top. I still expect this to reject until price closes above. It just means that when we revisit this gap here, I know it's an area that we've been shorting from, but I'm not necessarily expecting as big a reaction in here. I'm watching out for a secondary move like this, for example, when we get this inversion, to give me the indication. What I would need, like with this inversion here, is I need to see these fail. So that candle rebalanced it, but I'm not going short off of that. I'm still favoring longs here because we've held the gap. But where it's been rebalanced, yeah, I'm now not kind of expecting that to necessarily hold if we do go. Obviously, when we close below it, you know, that then gives us the real indication that price is ready to move. So hopefully that kind of explains that one for you, mate. So render. Let's have a look what we've got here. So weekly, really similar situation as we just discussed with CAS. We've got this. We've got a weekly gap holding here. Yes, this is currently below it. So if price is going to move down lower, then we are going to look down to 5.035. The daily, this isn't really doing as much at the moment. So let's get rid of that. The daily here is kind of in a really interesting state of flux, because if we look at the order blocks, we want to see a close, and not like I say, a strong close, really. These are real kind of tickles, yeah. First of all, you've got a little bit of a downside wick, tiny little bit here, but ultimately that sets this order block in play. And then if I'm really, really want to be fastidious about this, I'll take my Fibonacci on the flat level of that to the top of the wick, and I really want to see this 50% level respected. If we start getting closes above that, could be a sign of weakness, in which case we can target this swing high or this gap. However, on a daily scale at the moment, we're kind of waiting for both. But again, I'm leaning bearish. Why am I leaning bearish? Because, you know, strong, big-bodied bearish candles here, and the upside wicks are winning the race for me. In terms of this, the 4-hour brings it into even sharper focus, because we can see right here what's been going on. We're being suppressed under this bearish gap. You know, the longer we spend under here, look at the long downside wicks, price coming up, tried to get above once, twice, 3 times, 4 times, right? So really simply, as long as we remain below this, I think we push lower. We've got a beautiful cluster of lows built up here. Yeah, money under those lows. Unless we close above this. We close above this on the 4-hour, then I think we've got a beautiful cluster of highs up here to attack. So holding this is the key thing here. Close above it, we move higher, in my opinion. Hold below it, I think we could see lower prices. So that was render. SHIB. Brilliant. Hang on, just remember matey boy who just said this will absolutely drive me mad, which I love. So let's see where we are with our good old friend SHIB. Yeah, SHIB just looks really strong, doesn't it? Like, so there we go. We've come in and taken out this high. Now expect a corrective move lower to rebalance a gap. We don't have a gap, so I'd be looking down towards 2 things here. One is this order block. think that's a good area to find some support and maybe have some bids, or not blindly bid. I certainly don't blindly bid, but what you do with your strategy is totally up to you. For Confluence, we can also see here that we have this beautiful inversion here. Look, rejection, rejection, strong close above. So big order block sitting here, hasn't been retested yet. Beautiful inversion here, also hasn't really been properly retested. So at the moment, I think this looks quite bullish, but we would need to finesse it. But it wouldn't surprise me if we came back down to retest this area. We're going to leave them on there because that's quite important here on a daily scale. Now, the other thing here actually is there's two things. One, we're holding this large bullish gap. Hey, Pitt, how you doing, my brother? Pitt, just one of the finest swing traders I've met in a long time, guys. I always shill his Twitter account, and nobody really seems to follow him. He should have like 50,000 followers, the calls this guy's been making. So someone please shill his Twitter account in there, just in case any of you are actually interested in making some money. You can do that with us over at TBN, and I would strongly advise you following Pitt and his calls. They've been exceptional. So first stage of recovery here for SHIB, right? This gap, rejection, rejection, close above. I like this. I like SHIB here. It's holding this at the moment, which is telling me that it wants higher, and we have equal highs above us, which are always a really good liquidity target. So I've actually got a really simple plan here, and I'm just going to keep this on the daily here with SHIB, which is hold this on a daily scale. We move from here to here. We need to be a little bit wary of this gap because this is a gap high because it's sat within this gap. Close below this here, and we move down to this low first of all and retest this kind of key weekly area, which is 0.40154862. All right, you might need to pause the thing here and take that number down because that's not an easy one to remember as you reel it off. What was the other one? USDT. Someone did ask for AR, but I can't find that as unless it's maybe here. Maybe it's this one. Let's have a look at our friends over at Bybit, shall we? Love the sloped resistance here. That is just liquidity waiting to be taken at another point. On a weekly scale, we don't really have anything here. The last thing that we've done is kind of take this low. Didn't see the greatest reaction. Price now breaking back down probably tells us, or does tell us, that there's a little bit of weakness there. This weekly low becomes a target, which is at 1721.31. On a daily scale, we can see this is really clean here, being held below this bearish gap. So while we're respecting that, I think we push lower here. If you wanted extra confirmation of that, we would be looking for this up close candle to get closed below, setting it as the order block. Then we would look to chase out this level down here. On a 4 hour, if this is the resurgence, if this is going to hold, if we're looking at this order block here holding, this down close move before the impulse higher, then we've done two things here. We have, let me draw this one in first actually. We want to see price hold this bullish gap and respect this bullish order block. So quite simply, we would be buyers here if we get the right triggers for price to move higher. Close below this early stage indication that we're coming down for this low, which is about 18.2188. Okay, so really nice and clear on that one. Myro, what are we doing with Myro? Let's have a look. On the weekly, we are very similar actually, I think, by the looks of it. I think we maybe just tapped into that bearish gap there. Let's have a very quick look. High was 95.90. High was 97. Hang on, what am I talking about? The high here was 97.01. 97.47. Okay, well, there we go. So we've just tapped into that. Look what a good job that did. Key thing here is that long downside wick from last week shows that there's been a bit of absorption there. So I think, as we kind of closed above this down close candle, really the battle was to get above this one, because that candle is within this one's range. So I've got a lot more kind of respect for this one. We've obviously got above that, closed back down. But again, looking at this from the point of equilibrium, we still didn't close below this. So this dip down lower could have been, to test this order block. And now we're seeing expansion. So probably a little bit bullish here, looking at this kind of coming up to get a little bit deeper into that order block. On a weekly scale, would love to see a close above this, which would give me even more conviction. Yeah, on a daily scale, we can see this is quite nice, actually. Again, you know, broken record time for you all, but the inversion here was really kind of a key sign that we saw that initial resistance to support flip. And again, long upside wick here. This was really nice. So be surprised to see price not kind of make its way towards this level here, which is resting liquidity at 0.09747. And then on a 4-hour scale, what do we want to see? Well, quite simply, this order block to hold. And I love this liquidity pool. All this sloped, untapped liquidity here is just money. You know, you're just going to get that attack. Yes, we drove into it to here, so we filled all of that bit to there, but look what happened. That initial rejection price, if this really wanted to break down, not really sure why it would then show strength to come in and set this bullish order block. So I think for at the moment, Myro, I think, looks quite bullish. I know these things are obviously all at the mercy of Bitcoin, but, you know, as is the whole crypto market, right? Let's have a look here on Rose. Cool. Rose is a really interesting one, actually. This is where I get to use one of my favorite terms, recency, which will give Erica a chuckle, and some other people from Trade Club, right? Because for some people, recency is a really, really important thing. Like for myself and my trading, for example, for other people, they see it as a little bit of a misnomer. Again, just goes to show you there's many ways to be successful in this industry, all right? Just make sure you understand your data and your system. So we've rejected here, and this is to go to Burns' point earlier. Now we've rebalanced this gap. Still means that it's relevant, just means that I don't expect, you know, this to be causing the action. I will need to see something inside of it. What I'm really interested now, and this is where the recency comes in, is we've shifted structure here to the upside. We've set this beautiful order block here, which has just been retested. So now we're holding this bullish gap. So I really want to see a strong reaction here from this gap so that we can move higher. And to make that happen, we need to see a little bit more than we're getting from price at the moment. So the initial thought process would be this. Here's the down close candle. We get that close above it here. And what happens? You think, but that didn't work, BC. But it effing did, right? Look, closed above it here. What do we say? What do we aim for? The next resting liquidity. Where's that? Here. Right? So we got that. The close above took us into this. Now, this rejection down here I don't really like, because I would have liked to have seen this area hold and show us a little bit more strength. There's not tons that we can glean there on the daily. So the 4-hour will be our friend here, I think. Some pretty decent downside wicks, but probably some slightly better upside wicks, I would say. I think the majority are coming from this order block here on the 4-hour. So I think what I'd like to see here is price close above this. Yeah, that's the down close candle. That will make the order block. An initial one, if you wanted to get quite cheeky, would be this one. All right, because those down close candles, that body does exceed the range of that one. So this is kind of independent. Close above this on the 4-hour, and I think we move higher. If not, I think we're basically just kind of rejecting at this level now. And we've got, look, again, you want to talk about temptation. You've got equal lows resting down here. And you've also got this beautiful sloped liquidity here that just hasn't been tapped into, right? So that is going to be a real key element for price. So again, if we start show strength and we close above here, I target this high, which is around about 0.06884. As long as we remain below it, we have to stick with our trend bias, which here is a little bit murky, but I would say this looks like it's getting pushed down more than up. But if we see that resurgence here, then there's plenty of liquidity for price to attack above that. Now, I'm going to try and do this one. So this was 1M baby. No, I don't think it's a, hang on, baby. Okay, hang on. Baby Doge on, hang on, baby Doge. I can't seem to find it on Binance here, fella. That's the only thing, because if I type in 1M baby Doge, then it does not allow me to search the ticker. But let me see if I can put it on here. 1M. Well done. There we go. Perfect. So let's look at the perpetuals here. What have we got? Yeah, it's okay. So weekly's not going to tell us much, right? Obviously, it's a new coin, but I do like the fact here that we've had this, you know, we've had the inversion here, meaning that on a daily scale today, moving into this on Wednesday, I would have been looking to this to pump and to here. Now, I do not know what it's going to do when it gets here. Obviously, it's something that's relatively new. It's probably fairly illiquid, but I would say how we react here is really key. On something like this where there's so little data, we need to kind of refer quite heavily to the 4-hour chart. This is the level that we want to see held. Okay. On Baby Doge. Apart from that, I don't really know. Maybe we kind of move down to an hourly here. And look how well respected these order blocks have been, right? So again, I would just say this is your kind of line in the sand here, is watching these order blocks. We want to see that hold. If price retests that and comes up, if you come down, lose that order block, and then close below this bullish gap, I would then be expecting a corrective move lower. And we've got a lot of liquidity to attack below here. I think this will be a fairly epic short at some point, but again, not saying that's right now. All right, legends. Again, I've managed to keep this under an hour, but miles away from the 45-minute limit that I wanted to set on this one for you all. But I think we did well. We covered KSM, Casper, Render, SHIB, AR, Myro, Rose, and Baby Doge as well. So hopefully that has been useful for you guys. Really do appreciate you all tuning into these streams. Just going to show you some of the amazing work that people, as I just said, our trading team, Pitt, who's in the chat with us all right now as well, has just been absolutely crushing it along for all our members, right? You get access to all these calls, you get access to our trading team calls, you get access to all our exclusive deals with exchanges like our partners over at Bitget as well. And these are just some of our happy members sharing their calls, all right? And if you look at this, total our profit in September was 48.37. That means if you had a 10K account, just applying 2% risk, you'd have made $9,424, right? So if you had a 1K account, yeah, with 2% risk, then you'd have made almost $1,000, right? So, do the maths on that one. Come and check it out. You can find everything down in the description. And don't forget, if you want to get involved in the spot side of it as well, you can get yourself $20 free sign-up bonus here with our partners over at Bitget. You can just follow the link in the description, and do come and check us out. Come trade with us and come and be part of our magical community over at the Bird Nest. A really, really big thank you to all of you who tuned in today. I really do appreciate every one of you. Trade Club legends, I will see you in about 15, probably 20 minutes now, in truth, over at the Bird Nest. Have a fantastic week ahead, everyone. I will see you all again on Monday for our live show. And for those of you, I will see you all over at the Nest.